Welcome to the Inside Public Accounting podcast. I'm Chelsea Summers, Executive Director of Inside Public Accounting. Today, I have a really special guest joining me, someone I have wanted to have on the show for a long time. Michelle Golden-River is a growth and profitability strategist, a certified professional facilitator, and the founder of Fore LLC. She has spent her career helping accounting firms do something that sounds really simple, but is one of the hardest changes a firm can make, getting paid based on the value that they create instead of the hours that they log. She's the creator of advanced pricing methods, which thousands of CPAs and consultants have gone through. And she has personally guided more than 200 firms, including some of the largest in the country, through the transformation. She has been named one of the top 100 most influential people in accounting and one of the 10 most powerful women in accounting by Accounting Today. And her work has appeared right here in Inside Public Accounting. Michelle, welcome to the show. I'm so glad you're here.
Thank you so much for having me, Chelsea.
Absolutely. So for listeners who haven't spent much time thinking about pricing models, can you walk us through the landscape? What are the main alternatives to hourly billing and how do they work in practice?
Yeah. So most firms think there's only like two options. So hourly billing or fixed fees, but there's actually a progression of pricing sophistication. So at the most basic level, you'll have hourly billing, where the final amount isn't known until after the work is done. And to which we answer, I can't tell you, I don't know yet as far as a price goes. And then many firms move into fixed pricing. And then subsequent to that, there's subscription pricing, unit-based pricing, multiple option proposals, et cetera. And then ultimately, firms can move toward what I call worth-based pricing, not value pricing for a very specific reason. But that's where the investment that's going to be made is shaped collaboratively around the buyer's desired outcomes and the buyer's perceived worth. The back to fixed pricing just for a second. A lot of firms for 20, 30 years have been using fixed pricing. However, a challenge with that has been sometimes it's not actual fixed pricing. Like we'll give an estimate, we'll give a number, but we treat it like an estimate, meaning we move the needle on the price after the work is done and we look at WIP. And so I would just want to make sure that listeners understand that when we say a fixed price, what that really should mean is you honor it no matter what. If it's not being honored no matter what, it's really billable hours in disguise. So, yeah.
Okay.
So, and one of my favorite distinctions is that an estimate is not a price.
Okay.
An estimate is just an estimate.
That makes sense. And I'm sure those estimates are always higher than we quote the client and that we don't ever lower them.
Yeah. Well, it's funny because accountants tend to your point, accountants tend to do this thing where they'll say not to exceed X dollars. If they're trying to give a fixed price, which is so terrible for the firm, because what we really should be doing is saying starts at X dollars.
Yes.
If we're going to not spell out scope carefully, herein lies the trouble. So firms or profession as a whole writes off about 20% of its work, meaning nationally realization lands at about 80% if you use that metric, which it's not my favorite metric at all. I think it's a terrible metric. But across the nation, 80% realization is very common, which means firms are writing off about 20% of what they do. And I think the reason firms write off so much is because we don't spell out our scope at all. Like we think we do, but we really don't. And to which I would give this example. If I asked you to do my tax return and you said, sure, I'll do that for $4,000. What do I think is included?
Yeah, right.
Everything, because you didn't tell me anything specific that wasn't included. So however many states I'm going to have, however many complexities that I'm going to have. And if we're not telling the client, well, and I love ranges. Some people hate them. I love ranges. So you know what? I can do that for you for 3,000 to 5,000, to which we have to follow and say 3,000 if and list some
Mhm.
conditions, 5,000 if, and list those conditions. If
Right.
you just drop the 3 to 5 range, but don't say what the conditions are, you are going to create friction in the relationship because as soon as it exceeds 3, but you don't tell me, I will then be upset at the number and lack of control. So, with a range comes the responsibility to give some insight into the parameters of that range. And the beautiful thing, and I'm a big proponent of offering options, the beautiful thing about those parameters is is that that clarity gives me choice and a feeling of control.
Mm. Because as a client, you're not privy to the difficulties and what changes. You're just saying, "This is my situation. Isn't everybody like me? Isn't this a standard tax return?" You
Right.
don't
Yeah,
understand
exactly.
how complex or non-complex that is. So giving them those, guidelines, that makes sense. Otherwise, you say 3 to 5,000, they hear 3. Great. 3 would be
Yeah.
awesome. Whereas the firm is saying, "Okay, this is actually gonna be more like a $5,000 project." That makes
Correct.
sense.
Yeah, and when I would say when I would work with an accountant to say who doesn't know where to start to say what the 3 to 5 should contain, I say base it your lowest number, say what has to be absolutely perfect for it to be just this much.
Mhm.
And you can then kind of go through, well, if they get me their information by this date, if it's clean, define clean, et cetera. So they can kind of list out, or you can kind of mentally list out what has to line up. And then I say, okay, so in reality, what usually happens? And that's the stuff that we put into the higher number.
Yep, that makes sense. So, despite the fact that the profession has been talking about moving away from hourly billing model for literal decades, IPA's data last year showed that 67% of all revenue is still generated from a charge hour times rate or billing model. So that number hasn't really moved much. Why do you think adoption has been slower than we'd expect?
Sure. Well, part of it is just mixed definitions. So, if you use a definition for value pricing, that could mean 100 different things to different people. I've had, so those surveys that say, oh, does your firm do value pricing? Almost everyone will go, oh, yeah, I do that. And I'll say, well, what does that look like to you? And they'll say, well, I do the work. I think about the value. I decide how much to send a bill for. And I'm like, no, 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 no. That's not value pricing. So part of it is definitional, but the bottom line is that because hourly billing isn't just a pricing approach,
Mm,
it's an operating system for firms. It it probably didn't start until most firms until around the 40s or 50s, but if you think about it, almost every single report that management generates has hours in the report in the metrics. Everything around the firm is based on hours, hours, hours. It's in comp, it's in time and billing systems. So it's in our operating systems literally and figuratively. And because it is at the heartbeat, our counting our time is at the heartbeat of our firm. Our people today in CPA firms are the fifth generation of accountants taught that they sell time and breaking that belief. So it's an operating system and breaking that belief that what you sell is time. I heard it just 2 days ago. Again, no, I've been taught, a 56-year-old managing partner said, I've been taught, that we sell time. And it's so embedded in the mentality that breaking it, there's a ton of people who intuit that's not quite right. Something seems,
mhm.
it's not healthy, especially as we introduce more efficiencies today, but they don't know what to do instead. So there are some skill gaps because we were taught how to track time, the point one, minute increments, and we're taught how to bill our work. We're taught how to create proposals based on hours budgets, but we're not taught how to have conversations about ROI. We're not taught. There is kind of a defensiveness element to it. We are taught how to tell a client, this is what I did for you, but it sounds so, it is defensive. It's a defensive
Sure.
position. It's after the work when we have a chance to say, well, I saved you, $800,000 in tax. Um, pricing happens up front, billing happens in arrears. So the skill set for pricing is very different than the skill set for billing.
So I'm hearing that some of the resistance to changing pricing models is not just it's hard, but it's a cultural problem.
Yeah. Yeah. And I hesitate a little bit to call it a problem. I mean, it is a problem to someone like me who wants to change it, but
It's a cultural
it's
barrier.
yeah, yeah, it's a cultural barrier. That's right. It's a thing that worked okay for a very long time. It made firms a lot of money. It was sustainable for a long time. It's not ideal. It's not customer friendly. There's a lot of things about it that a lot of people just despise tracking time. I know I did it for many, many years and the thing that it satisfies to track your time is kind of the same thing that those of us who keep migrating back to physical to-do lists
Mm.
versus electronic in my tasks in, Outlook is the ability to write something down and cross it out. That kind of is the same thing that tracking your time satisfies because it feels good to note your accomplishment somewhere. But so we almost need a new way to put that thing like, have you ever on your to-do list written down something you already finished just for the satisfaction of putting a like
Yes, or it's something that's gonna take me 10 seconds, but I'm gonna write it down so I can cross it off later.
exactly, because the crossing off feels so good. So there is sort of, an addiction to kind of capturing how you've been productive. And I think that's really healthy. And I think that there's a good way to do that. But I think we can use other systems and necessarily tracking time because it's our billing system, because that becomes the firm's Bible, when it comes to our operating system. Um, it's just so deeply embedded and it is cultural, but
Mm,
it's also habitual.
yeah. So I know that you do day and a half or you go into firms and you talk to them, and this is not something that anybody is going to solve in this conversation. But if a managing partner was listening and they're saying, okay, I really, really need to change my billing models, what is the first thing that you tell them to do?
Hmm. I think the first thing to do is just to kind of understand that cultural thing that we're talking about and to put ourselves in the client's shoe. Do you mean mentality or do you mean action?
Either.
Because I'm talking mentality. Oh,
Probably mentality needs to start before any
it
actions
does.
take place.
Because to change our actions, we have to change our beliefs. And to change our beliefs, we have to have kind of a shift in our understanding. So I would say, put yourself in your customer's shoes. Most of us have hired a lawyer for something or another at one point in time. Remember how crummy it feels to get billed by the hour. I'm going through some estate work from my mom, and I just got an hourly bill a couple days ago. And of course, it's a woo, eyes open shocker. And then I'm like, how come it took point 0.4 and 1.2 to do this and do that? And it makes you start questioning, well, did they delegate it down to the lowest level they could have? Is the person competent? And it just makes the buyer like ask all these questions that they shouldn't even be fielding. We
Mm,
should, and another thing that it does is it prohibits two people in the same firm from talking to each other, which if I'm hiring a firm to handle both my tax and my outsourced accounting, I want them talking a lot. So I don't have to talk to both of them separately about the same thing. I want them talking, but they're remiss to do that because then they have to double dip on the timesheet
mm,
and they don't want to double charge the client, which is thoughtful, but it's not an optimal customer experience. So putting yourself in the client's shoes, also understanding, look, we're not bad people because we use this model. We're the fifth generation of people taught this. In order to break it, we need to be able to visualize what comes next or instead and visualize how to make that shift. So, like to your question, the first thing is realizing what's possible, realizing why we are where we are. That doesn't take more than an hour or two of discussion, probably. But then starting to recognize, okay, what skills do I need to elevate to some degree, and what actions actually shift in the firm to do it differently. But then the really big thing is the holdup is, our operating system is totally aligned for a different model. So as a managing partner, what you're thinking about is, okay, at what point does it make sense for me to start shifting the things inside of my firm's operating system that interfere with the mindset change becoming a reality?
Yeah. And as somebody who handles the data and the KPIs that firms are looking at, I'm also having conversations of not just changing billing models, but the technology and how it's really changing the way we're looking at metrics inside firms. So I think
Right.
wholesale, the metrics are going to need to start shifting, and the billing model is just part of that.
Yeah, they do. And, so how do we track, the client experience metrics that become really important? How do we track ROI? Something our time. This is such a neat observation. I was teaching a class it was a top 25 firm, and I had a longtime partner who was sitting in the class and a very cerebral person. Wasn't the most talkative person in the room, but when he did, it was like everything he dropped was like a nugget of gold. And it was towards the end of the workshop, and he looked up and he goes, we think we bill for what we know, but when we're charging for time, we're billing for what we don't know. Which is,
Mhm.
if you know something and don't have to research it, it's point one. But if you have to research it, it might be 2.5 hours. And that, like, the whole room was just kind of like the air sucked out of it for a
Yeah.
second, because it, it really is real. So how do you capture that? How do you capture in your metrics? How do you capture what you do know? When you're billing by the hour, if we are mostly billing what we quote don't know, the metric is something that's gonna be needing to reflect what we've left on the table,
Mm.
which is, that's kind of an impossible thing. So that's why the whole focus around worth-based pricing is an understanding of what we're solving for the client, understanding what is different for them as a result of working with me.
Yeah.
And that is what we need to identify on the front end. It's not a list of tasks, it's not a list of services, it's not how long it's going to take, but there's two sides to the coin. There's worth it to the firm, which we can talk about later, which is our time and among many other things, but there's worth it to the client, which is, how am I different as a result of hiring you? And when we can identify what one, two, three things become different, we can start to associate a relative worth to that.
Yeah.
And once we establish that amount, like, say, I can help you double your revenue in 2 years. That's a big kind of loosey goosey one. But how much is their current revenue? What is double that? What percentage of that doubling is an appropriate amount to ask for? Rule of thumb for consultants like McKinsey and Bain and these others is roughly 10%, roughly a tenth of the improvement, somewhere between a tenth and a third. A third seems like a lot to me. So if I can say, okay, I've got a budget of about a tenth of their improvement, a tenth or less, what can I do for that?
Yeah.
That's when you start going, okay, worth it to the firm. If this is a number that I can kind of seek to focus on, what can I do for them within that amount? And that really opens up all kinds of doors of creative possibilities. This is sort of more backing into, um, building my tasks around an outcome
Hmm.
rather than taking my outcome, or forgetting the outcome altogether and focusing on my time and energy and effort for an undefined outcome, which is what we do when we track and bill time.
Well, it seems like all of that also leans more into advisory services. And as firms are trying to move to more advisory, that pricing is going to become more important because it is more squishy and it is more savings or increasing, and as opposed to compliance focused tasks where it's do this task and it's complete and you're done. So
Totally.
that
I
makes sense.
love that word squishy. It is. And it can feel squishy when you're doing worth-based pricing, so I usually will recommend, like, we might have our squishy words, like, get you to this point, like, double your revenue, but then very specific, more tactical things that are that's pretty measurable, double your revenue. But within that, what are the 2 or 3 impacts, that the specific things that we're impacting along the way? One might be product line related, one might be labor cost related. One might be transformative for equipment or processes, helping your client with that. So if you're a manufacturer, it's going to be more on the equipment, maybe on some labor side too. But like, what are the really specific impacts that we're going to help you achieve to do that? And then it feels less squishy.
Right. That
But
makes
you're
sense.
right. Squishy is a big challenge for the CPAs because they don't like squishy.
Right. Exactly. So when firms start to make this transition, how are the clients actually responding? Is it a hard conversation like firms feel like, or is it something that you see that goes very smoothly?
It it's really funny. There's so much kind of trepidation about approaching the client with these conversations. So a big tip that I recommend m more strongly than anything else, because there's no one right way to do this, but a big tip is do not start with your current clients. Start with prospects. And it doesn't take a ton of practice with prospects before you can start doing this with customers, current customers. I think 5 to 10 sales using a more worth-based approach is more than enough to equip you with the confidence to take it to your customers next. If you start with your clients, what I have watched, because I've watched some people either A, not take my advice, or and I initially created that advice based on watching other people implementing like value-based pricing from Ron Baker's books and whatever, but not something I taught specifically, but just going to their current clients first, which is an instinctive thing that we want to do, is like fix a problem, fix an issue. So we would go to a current client and say, okay, we want to this is a never do this. We want to do change the way we price. We want to price differently because your
Mhm.
client's immediately going to think what?
More expensive.
Yeah, going up. And boy, we had a lot of those conversations in the last couple of years with clients.
Right.
So what we want to say is we're doing business a little bit differently.
Mhm.
And what we're doing is we're giving you choices, 3 options. And we're basing our pricing more on what we're helping you accomplish than how long it takes us to do it. So if you go to a current client and you say, I'm changing something, very natural for them to think, well, obviously this is going to benefit you.
Mhm.
They're going to be thinking, you're doing this because it's better for you, it's better for the firm, it's going to, cost me more, you're going to, whatever. Even though they
Right.
love you and trust you, they're still going to have a skepticism. When you go to a prospect with the exact same approaches and you say, we're doing, and you never say we're pricing differently than other firms, you say, we do business differently than other firms. We understand what you're trying to accomplish, and we put together pathways to get you to that, and we'll come up with a couple different ideas, and we'll work with you to figure out which one is best and makes the most sense and feels right to you from an ROI perspective. When you go to them with that, they are so blown away
Mm.
and excited and intrigued, and it's you enter the conversation so much differently because your relationship kicks off where you're not a vendor checking a box. And this is for people who called you about tax or audit, by the way. This isn't
Sure.
just advisory clients. You're coming in as a consultant, not a vendor. And how you sell is how you serve. You're presenting ideas and options, and it's collaborative. They love it so much. So after you do that 5 or 10 times, you can then go to your current customers and you can say, we've been doing something with our prospective clients for the last year and they love it. And it is high time that we bring this to our current clients. It's a change in how we do business, but they love it. And we know you're going to love it too. And you can say that not because Michelle told you to, you can say that because you've watched it happen, you've felt it, you've
Yeah.
experienced it personally. So I always say, start this experiment, this new thing with your prospective clients, not your current clients. And typically, roughly a year maybe of practicing with prospective clients first.
And I like that because just the framing of it where we're doing business differently and we want to bring it to you because it's been so successful with our new clients, like that almost feels like you're letting them into like a special club as opposed to, like you said, the negative of we're changing things on you and you're going to lose in this situation. It's like we're bringing you something
Totally.
that is going to improve the situation because it's already improved for other people.
I
So I
love that
like
you
that.
picked up on that. Like, you remember years ago, like, I don't it probably still happens all the time, when you're a new client with a cable company or something, or a cell phone company, and you get in on this fabulous deal where it's like, "Oh, the first 3 months are almost nothing," and then after that, they're treating prospects better than they're treating current customers. So after you've been there a while, you're like, I want the discount I used to get. How come I'm a good, loyal customer and I don't get that discount? It kind of has that feeling of, hey, we cut our teeth on this with people that we didn't have high risk with. You are a valued, treasured customer. We learned that they love this. You need to get in on this too. You
Yeah.
deserve to get in on this.
Yeah, I like that framing. I think that that's a good takeaway for listeners is just really how you frame it and your full support behind it. Not saying, "Oh, we may be trying this thing and oh, it may or may not work and oh, we don't really like the change," but really thinking that it is going to change your business and their business and looking at it from that positive light.
Yes, totally. And I've seen some of the most skilled, most consulting oriented, natural consultative people in CPA firms go to their current customers, try to present a new model, and come back with their, you know, tail between their legs, feeling chewed up and spit out by the client. And because the client's like, no, please just keep billing me by the hour. Literally, I had a, 50 something partner who could sell anything to anyone come back and say, no, my client wants to be billed by the hour. That's ridiculous. Nobody actually wants to be billed by the hour. That was because he was so uncomfortable with what he was presenting that he didn't present it with confidence, and they smelled his fear and, chased him back out of the
Right. If
office.
you're not confident in this, then we're not going to be confident in it either.
We know many of you listen to this podcast on the go, driving to work, working out, even doing chores. Now you can get CPE credit for that time. With Earmark, you can earn free NASBA approved CPE for listening to the Inside Public Accounting podcast. After you listen to an episode, take a quiz and your certificate will be ready. Earmark has courses for everyone in your firm, from staff to partners. Get started today at earmark.app or download the free app on the App Store.
Yes, and I want people to be confident in their model shift. It's not an easy thing to do because it is very intuitive, but it's opposite to what we've done ever in our careers. And,
Mhm.
it's I'm not saying old as far as age, but people who've grown up longer in the profession doing it the old way however long they've been doing it, have increasing levels of, um, skepticism about it being effective and beneficial, but they also have they default, even though they believe in the change, they can default back into the old ways so much easier than, say, someone who's kind of new, maybe a 5th year or 6th year,
Yeah.
who just intuits the ROI conversation better and never really believed we sell time anyway. So it's just easier for them to make the shift.
I wonder if firms, because you say that those that have been in accounting longer have the hardest time making change. Well, that's the partner group that have been
Right.
in the profession the longest, and they're the ones that are advocating for the change or need to lead the change. So I wonder if bringing in some of those younger staff that intuitively get it, or maybe somebody that came from another profession and this is a second career, like those with outside perspectives, it seems like this is a good area to bring them in to help implement and really change management, teach everybody why we're doing this and how to do it successfully.
100%. You're totally on point. The firms that have had the most success are the firms that have involved people at the associate level, below manager, and the firms that have had the least success as far as making a institutional shift, are the ones that tried to do it all at the partner and manager level. Really, really big firms, just for the purposes of training, tend to do partners first, some managers, sometimes all managers, but they seldom dip into the lower ranks of senior associates, et cetera. And smaller firms will literally put their entire team, receptionist and all, through training, and everyone together gets it. While the what we see when they do that is the younger team members um, push up on, we got to do this, we got to do this. Hey,
Yep.
I'll take this and run with the proposal, first draft. You can tweak it
Right.
afterwards. They keep, one is a time element, right? It takes
Mhm.
time to make a change. That's another barrier is, the first ones of these that people do, I always tell them it will take a stupid long amount of time because it's totally opposite of how you've gone to market before. And after the first, I would say around the tipping point is around 5 or 6, you start getting into a groove, you start having some, have enough in the bag to have some templates ready and stuff like that, and it's a lot easier to move. But getting the young people to, and I hate to say that, the young people, the people with the most energy for it, to whom the change is less dramatic and more relatable, yes, leverage, leverage, leverage.
So this has been something you've spoken about for a while, coached firms on for a while. But in the last several years, there's something that has kind of, from my seat, really accelerated this change, and that is artificial intelligence. So firms are implementing AI and it's helping them become more efficient. But that's then penalizing them because they're billing fewer hours because the work is becoming more efficient. Do you see that that's really pushing firms? Are you talking to more firms who have concerns because of their AI implementation and how that's changing, the hours that they're billing?
Yeah, it is. It definitely is accelerating it. I love that it's not what caused firms to begin the shift. I love that because it's really important that we have that. What we're seeing now is such a dramatic time reduction. We actually, that I have data I'd love to share with you, that shows we've been kind of dealing with this efficiency conundrum for about 15 to 20 years. However, right now it's such a sharp amount of savings that we have to do something. Frankly, AI penalizes firms that are under hourly billing.
Mhm.
Um, and it literally reduces revenue, right? Which creates a dangerous incentive to not move to AI. It's kind of crazy. So, but AI is just shining a spotlight on what was always true. Buyers have never actually purchased hours. They're purchasing outcomes, they're purchasing confidence in their numbers, insight, judgment on your part, speed. How fast can you get me this information? That's opposite of ours. The faster I can resolve your problem should be more expensive to you than a slow, delayed improvement. So the real problem, the crux of the problem is that our entire revenue is built around a downward moving data point, and that's time.
Mhm.
And like I said, the whole operating system is around that. So what we're watching right now is people's aha moment that our current model is completely unsustainable. And they're feeling this urgency to replace it with something.
Mhm.
Um, and I mean, you've seen the big four in the news recently. One doing peer review type services for another one, telling them, "Don't charge me more because I know you're using AI on my engagement." To which I just want to squash my head and then beat it against the wall because they're they're so locked into the old mentality that we sell time that they're
Mhm.
doing it to themselves, which means they're totally doing it to clients. And I have, read article after article in the last 6 months about, big four and top 10 firms are are moving to what they're calling outcome based models. But when I dig deep, what I'm seeing is that they are moving to a form of fixed price that still is far more input based than outcome based. They're talking about performance-based pricing and all of that. What they should be doing is looking at organizations, non-accounting firms, maybe some accounting firms that have been using um, real like worth-based pricing approaches because it's still a different mindset. If they're moving to performance-based models that still have a heavy internal focus, this is the problem with hourly pricing, right? Is only considering the seller, not the buyer.
Yeah.
The performance, the outside, so worth-based pricing considers both equally, the worth it to the firm and the worth it to the customer. And their price is somewhere in the middle, where is kind of, it can be kind of formulaic. But if they're what I'm seeing them move to is something that's still not going to be long-term sustainable, and it's still not total like worth or value-based pricing in
Sure.
reality. It's
But I'm
still
sure the conversations will continue. And as firms implement more and more technology, that it's they're going to have to keep reworking this if they don't jump all the way to that worth-based pricing initially.
it's a big swing because I this is a conversation that happens in a lot of my workshops is it is 180 degrees from where they are today. And you
That's
know,
scary.
it is scary. And it's really frustrating for team members if you're a team member in the firm and not the leader, and your leadership is still looking at reports that say that you're only productive if your utilization is over da da da, or your realization is above this. And all of your firm metrics are still old metrics that are based on time equals money. it- they are literally incentivized to not make this change.
Mhm.
And so I don't think it's the place to start, but looking at it just because they don't have confidence in what they'd move to until they see it in real life. Um, I think a supervisionary firm could, but I don't think that most firms of size, I want to say over 10, 15 million, are going to be comfortable doing a change that is changing their metrics and KPIs and reporting and all of that first. I
Yeah.
think they needs to be concurrent. But I use this analogy, Chelsea. It's like if you were changing your tax prep software and you're moving to this new system and you say, okay, on, you know, July 31st, we're flipping the switch and the old system will be off and everything has to be done on the new system from August 1st forward. That's awesome because then everybody gets trained up and everybody starts using the new system and nobody can continue to use the old system. Picture instead of that, if you say, okay, we have our old system, we have this awesome new shiny system, everybody's been trained on it, but the old system, we're going to keep going for a year. Watch your uptake. It's going to be terrible.
I'll do it eventually. I'll move
I'll get
everything
to
over
it.
eventually. I'm too
Yeah.
busy right now.
Yeah, and they're gonna if you have parallel systems, people are gonna stick with what's familiar, comfortable. Oh, I know exactly where to go, drop down this menu, and it's the third thing on, I know exactly where to find everything. But when the switch gets turned off, that uptake grows. And so when people are moving to this model, that's a conundrum I'm dealing with is there's parallel systems. There's all of your current clients that are still on bill by the hour. And then every new client you bring in under the new model, which literally is 1, 2, 3, it's this pace compared to thousands of customers on the old model. So
Sure.
you're slowly adding clients under the new model. It it's going to take forever if you continue running both models. And sometimes in some firms, having the largest volume in the old system kind of sucks the energy out of the new system. And you see people defaulting back to the old before it
Yeah.
can even get legs. I've seen that in some firms, and it's unfortunate and it's heartbreaking.
So you've given a lot of great theoretical and kind of first steps, but for a managing partner who is thinking about this, but you know amidst the other changes going on in the profession doesn't feel like, there may be time. What do you say to that person?
Well, you don't have to change everything tomorrow. Start with the mindset and, understand this profession is changing whether we participate or not. I am never going to say the sky is falling, that firms can't continue to bill by the hour, because some will, and they're not going to die immediately or anything like that. So, but I would say the sooner you start experimenting and exploring, um, it, the sooner you do that, the better. The sooner that you can build confidence in another approach, the better. And perfection is we can't let perfection be the enemy of the good.
Yeah.
We don't need perfection. We need experimentation and we need momentum and energy toward it and leadership. Leadership is the only thing that is going to carry a firm through that hump of being dragged backwards into the old way and defaulting to the old method is, leaders that see the writing on the wall, that understand that the sooner we get started, the better, and that understand that it is an emotional, I hate to
Mm,
say it, the E word, it is an emotional and mental change even more than a skill set change. And so, they need empathy, they need care, they need encouragement, they need acknowledgement that the old systems don't incentivize the kinds of changes that they need to make today. And if leaders can run parallel metrics, if leaders can run, parallel comp systems, show people your comp is not going to suffer under the
right.
new system. This is what it would have looked like the old way. This is the new way. You're safe. It's okay. That
Yeah.
kind of reinforcement and encouragement, I think, will help a lot of firms that are, I wouldn't say they're on the fence. I would say um, they just don't know where to start.
Yeah.
So can I list a couple of what I think the skill gaps are?
Absolutely.
Awesome. So I think the skill gaps are understanding how to scope
Hmm.
work, because when you price up front, you need to have good scope to feel safe pricing up front.
Yeah.
So they don't have scoping skills. Creating a budget is helpful, but it's not a full picture of what we need in order to scope effectively. So there's that. And then there's managing a project to the scope. They can start this right now. They don't need to change their model to get better at those two things. And
Hmm.
then there's learning how to talk to the customer about ROI, and what they're really trying to accomplish, which is a very different discovery process than we have today. And then the last thing is how to present information that is, like you said, more squishy, how to present their proposals, their quotes with confidence. So it's really those three things. It's learning how to scope and then manage to the scope, which is two sides of the same coin.
Hmm.
Um, it sounds like a lot, but it's not.
And it's none of the things that they learned in school or that they needed to get their CPA license. Those are all, skills that as leaders we need to know and work on, and things that are very attainable though.
Totally attainable.
So, Michelle, where can people find out more about you, learn about your work, ask you questions if they want more information? How do they get a hold of you?
Sure, thank you. So my website is Fore advantage.com. My company is called Fore, and I am available there or on LinkedIn. Michelle Golden River. You can find me under any of those. So I'm out and about at a lot of the conferences. I'll be at Bridging the Gap soon. There's a lot of buzz going on about that one coming up in July. It's a great conference, and I love talking about this stuff. I love helping the profession sort of thread the needle on making this shift.
Yeah, and we'll
So,
put your contact information in our show notes.
thank
Michelle,
you.
this has been such a valuable conversation, and I think it's something firm leaders really need to hear right now. Pricing touches so much: the profitability, talent, changes in advisory, how firms hold up as AI changes the economics of the work that they do. It's I don't think it's a side conversation anymore. It's really a central one that firms need to be having internally. So thanks so much for sharing your expertise and your perspective and
Thank
years
you.
of wisdom with our audience. For anyone who wants to learn more about Michelle's work, we'll put the links in the show notes. And for our listeners, if today's episode got you thinking about how your firm approaches pricing, we would love to hear from you. Reach out to us through Inside Public Accounting and let us know where you are in the pricing journey. If you enjoyed this episode, share it with your partner, colleagues, and don't forget to like, subscribe, and leave us a comment wherever you listen. It helps more firm leaders find the show. Thanks so much for listening, and we'll see you next time.
Thank you, Chelsea.
Thanks for listening to today's episode. If you enjoyed this podcast, you can click below to subscribe and check out more from Inside Public Accounting.